Paul, when you look at global growth, it's fine, it's rosy, it's better than expected according to the IMF, and then you have this huge, trade tensions. How much of a worry is that actually they're going to be the catalyst or the fear in the markets for the next recession?
So I think we've got a couple of issues here. So the first point is that a lot of the global growth that we're seeing is domestic-led. So it's not really synchronized global growth. It's what I'd call simultaneous global growth. So the US consumer is alive and well and sort of, not necessarily in a shopping mall, but at least online spending money. The European consumer is showing signs of revival. In Southeast Asia, domestic demand is picking up. So you've got independent growth stories coming through. And the second thing is that so far, the trade tensions are basically noise. We're not in a trade war. We're nowhere near a trade war. I mean, Trump has just reversed 2/3 of the tax on steel and one half of the tax on aluminium by giving exemptions to anybody that matters. So we're moving away from the spin of the Twitter account and so on to the substance. The substance isn't that damaging.
Do you agree with that, Guy, that overall you're pretty confident about the future?
I think the near future, yes. I mean, I think a lot of the things that Paul has mentioned are absolutely correct. My concerns would be more on the profit side in terms of the US, maybe 6 to 9 months out. One of the things that I see in the profit data in the US is that corporate cash generation has been low relative to to net income for the past 9 months. And that's typically a sign that companies are building up their receivables, so they're having to offer better terms to their end clients in order to get sales done. So effectively, they're moving inventories from their warehouses to their clients' warehouses. And that, to me, is always a sign that we end up seeing revenues begin to decline for these companies. So I do have some concern, particularly about the US profit cycle as we head into the second half of the year.